Hello Dairy Today viewers, from the Stuart Peterson Advisory Team. Here's your Dairy Week in Review, closing the week of February 17th, 2012. We did see a very choppy and volatile week here for our dairy markets. We'll go ahead and recap the week by taking a look at our component prices, how they fared for the week. First, looking at cheese. As you can see, blocks did see some buying interest, able to lift about 1 1/4 cent and tack on gains there, finishing just shy of that 149 mark. Barrels did see a different story there, a little more selling pressure way down the barrels, down about a 1/2 cent, finishing right at that 148 mark. So we did see that spread correct itself, with blocks back at the number 1 spot ahead of the barrels. Switching over to butter, we did see some additional softness there. Prices slid down 1 3/4 cent at 141.5. And powders did see some mixed trade there as well. Looking at that March whey contract was down a penny, and March non-fat dry milk just up 1/4 for the week. Switching over to our class 3 prices, really did see some mixed trade here as well. And in the most recent weeks here, we have seen the brunt of the selling pressure way down these front months, but we did see more of the pressure in our more deferred months. So as you can see on the charts, March, April, May really not hurt too bad, not pressure too low. March actually seen some gains for the week, up 13 cents. And April, May only down 4 and 18 cents. But as you can see, once we got further onto the months, in the more deferred months, we did see a little more selling pressure there. As you can see, June and July down 37 and 27 cents. So we are seeing that premium built into these more deferred months start to come out and play a little catch up to the shorter term months. Looking at our class 4 prices as well, similar story there, not quite as much selling pressure in the front months. You can see February, March, and April down 1, 2 to 14 cents, but the selling interest really was heavy in the more deferred months. As you can see, June being hardest hit, down 46 cents, July not too far behind that at 21 cents. Taking a closer look at our cheese market, we'll flip over to the CME Block Barrel Average weekly chart, and a few key takeaways here. The first one being that it was an up week for cheese, although very minimal, and was really led by the gains in blocks, but we did finish the week on a higher note, just below that 149 mark. So we did put a halt to the slide that we've had here over the past 5 weeks. As you can see, once again on the charts there, 5 consecutive lower weeks for cheese. So very good to see we did have an up week, but once again it was minimal during this time period. Over the last 5 weeks, we did lose about 12.5 cents for a block barrel average, but overall, the declines have slowed. We look back to the November highs and going back to the December lows. During that time period, we were down close to 50 cents. So we look at this 5-week skid, only down 12.5 cents. Overall, it is supportive that we have found somewhat of a ground here in this 148 to 149 territory. Look at our class 3 weekly March chart. This is the second month contract, so it really does see the brunt of the volatility. And as you can see, I'm looking at the weekly candlestick, just the amount of volatility we had through the week, with highs topping out right around 16.15 and lows in the 15.40 range. So as you can see, trading in almost an 80-cent range throughout the week. And we did finish right in the middle of the pack there at 15.70. So when we look at short-term support, we did manage to finish above last week's low, so those will be a key area of support right at 15.29. Looking at resistance to the upside, just the way we reversed off those highs, only were there briefly, 16.15 will be a critical area of resistance in the short term. Now broadening the scope, we'll take a look at our international markets. Now they've been trending recently. We did receive 2 key reports that really gave us a snapshot of where things are trending, but overall they did send some mixed signals, so we'll go ahead and break down the numbers a little bit further. First, looking at the global dairy trade auction, the overall trade weighted average was down 3%, so we'll go ahead and look at some of the components that led to that decline. First, looking at cheddar, was down 2.3%, so that average price comes in at right around 161 there. And moving over to skim milk powder, we did see some gains, up 2.6%, so coming in right at around 148 for the average price. Whole milk powder was down pretty sharply, down 3%, finishing at 155 for the average price. And then moving over to the Oceania biweekly survey, we did really see cheese prices bounce compared to the previous report, up 2.5%, so good to see some gains there. And that equated to about 188 when we look at the average price. This afternoon, USDA released the latest milk production report for the month of January, so the first report of the new year, and we did see some very surprising numbers there, but overall it definitely explained the recent price action over the past 2 months. So we'll start with milk production compared to the previous month, and this is the U.S. total number. We did come in at about 2.4% compared to December, but when we do compare it to last January, the year-over-year change was a very big number, up 3.4%. We'll take a look at that on the charts in just a moment, how it compares to previous Januaries in history. Milk cows also saw some growth there, up 13,000 head compared to December. and compared to last year, up 76,000 head. So really seeing that growth coming to light as we move into this next year. Milk per cow did see it grow as well, up 40 pounds, and compared to last year, up 45 pounds. So take a closer look at just what that January 3.4% number means and how it compares to really the historical average for January. This chart does show, going back to 1998, the percent change compared to the previous year. As you can see, we did have some negative years here along the way. More recently, going back to 2010, when we did see some losses there. But as you can see, overall, this 3.4% gain compared to the previous month, very strong. When we look at the historical average, this red line represents that coming in at about 1.7%. So as you can see, we doubled that, coming in at 3.4%. We haven't seen growth this strong for January, going back to 2006. We saw growth close to 5%. So overall, very strong numbers. Definitely explains the recent price action. We'll continue to follow this in the months to come. So looking into next week, a few things to take note of. The first one being, with cheese finding support in this 148 region, actually moving higher for the first time in many weeks, overall supportive for the short-term trend, considering how oversold the market is. Also looking at key reports out for the week, the January cold storage report is due to come out Wednesday, February 22nd. And based on the weekly survey numbers for cheddar, inventories have been trending lower, so very interesting.